Thank you. I would be pleased to talk about the latest development of corporate reform and a stock market in Japan. I hope this might suggest something for our thinking about how to vitalize the stock markets in Korea as well. In Japan, we are seeing the historic moment of the stock market, as you might see. The Nikkei 225 average are reaching to the historic high price. Hopefully, in about a few days, not weeks or months, but a few days, the stock index in our country will surpass the all-time high of 38,915 yen, which was recorded at the end of 1989, more than 30 years ago. Many things have happened since then. Japan has transformed ourselves from developed countries into highly matured, rather aging economies. Korea, once one of the fastest developing emerging markets nations in Asia, now has become the very, very sophisticated and developed economies. There are many things to overcome for both of us, but there must be a way. It is significant for both of us to learn from each other. In this sense, I think it is so much important to discuss in this kind of opportunity. First, let me introduce myself a little bit. I belong to the editorial bureau of Nikkei newspaper. My main task is to write the editorial article on the papers. And my main coverage is finance, everything relating finance. That includes Tokyo Stock Exchange, asset management industry, investment banking, hedge fund, private equity firm, and shareholder activism, and etc., etc. Especially nowadays, I have written a lot about articles about corporate governance reform and shareholder activism. In this sense, I am very much interested in what is going on in Korea as well. I joined the Nikkei in 1988, immediately after graduating university. And as is often the case in Japan, I have been a journalist in the same company since then. 1988 was the midst of bubble economies in Japan, or rather near peak of the bubble economies. The Nikkei average reached their historic high mark at the end of 1989. Then the bubble collapsed, and we were heading into the lost decade, deflation economy. Fortunately, Japanese economies are getting out of the deflation, and Nikkei average have recovered almost the same level as we saw in late 1980s. I have been covering those periods, the fall and rebirth of Japanese stock markets, and writing about it. During my career, I have written 3 books. The first one is on the left. It is about the corporate governance reform in 2015. The second one is about Asian economies. And a third one on the right is the introduction of ESG investing. In each of these books, I mentioned Korea, an economy, and Korean markets. Korea is such a familiar country to me. I'm now preparing to write the 4th books nowadays. That would be about the history of corporate and market reform in Japan over the past 3 decades. And I would like to mention a little bit about Asia, including Korea. So in this sense as well, today's conference is very much important and interesting to me as well. According to the latest statistics by Diligent, just released several days before, a research company in the US and UK. In 2023, the number of companies publicly subjected to activism campaigns in the United States is 550. 550 US companies were subject to public campaign by activists last year. That number is so huge. The US dominates nearly half of the total shareholder activist campaign in this sense. Then, which country is second biggest and which country is third? Probably you might know the answer. Yes, Japan is the second and Korea is the third. Diligent statistics also shows the number of Japanese companies subjected to the public campaigning is 103, and Korea 77. So large, almost the same as in Japan. This is so marvelous because when we think about the difference of the scale of economy between Japan and Korea, the size of the economies in Japan is larger than Korea. But this activist level is almost same. This is rather marvelous and very interesting to me. In total, 220 Asian companies were subjected to activist campaign. So what about Europe? European companies, just 123. So in this sense, Asia is the hottest place of shareholder activism outside the US. And Japan and Korea are dominant in Asian shareholder activism. That is why I came here today to discuss the shareholder value together. I would like to mention the importance of shareholder activism later on. This is the corporate mission of our company, Nikkei, to be the most trusted independent provider of quality journalism to a global community, helping our customers make better decisions. It sounds beautiful. And we Nikkei journalists are always writing and speaking on this behalf. And of course, I will do today's speech with this recognition in mind. This kind of a neutral way of thinking is very much important, especially when we discuss the controversial issues such as activism. So neutrality and a balance is very much important in analyzing these controversial issues. So let me start lectures. First of all, please look at this chart. It indicates the stock performance of 4 countries over the past year, since the end of 2022. Please guess which country is Japan. Which? Can you guess? The answer is a blue line, the best performing markets. That one, second best, is the US. The yellow is Germany. So which country is green? Green is China. Obviously, Japan is the best performing market in the world, at least in the past 1 year. Does this fit to an image on Japan or rather contradicted? I don't know. Then, what about this one? These are Japan, US, Korea, and China. Could you tell which one is Korea? Please guess. Yes. The answer is the blue one. These 2 charts indicates that at least in the past 1 year or so, China is the worst performer. Japan is the best, and Korea is in the middle. We have seen the rebalancing of investors' portfolio in Asia. Investors are putting their investment out of China and try to reinvest in the money in any other Asian markets. Japan have attracted the money most up until now. And it seems that investment have been redirected from China into Korea as well, but less so active than into Japan. So when I use the words Korean discount, this is one of the reasons why Korea's equity market have been discounted. So why? Why is it that the Japanese stock markets have performed good so far in the past? I think there are two things to say. One is the corporate governance reform by former Prime Minister Shinzo Abe since 2014. And the other is the PBR reform by Tokyo Stock Exchange in collaboration with the financial service agency in Japan. Those are firmly interconnected with each other. Let me explain. First, corporate governance reform. The stewardship code was introduced in 2014, and accordingly, asset managers have had the obligation to act solely for the benefit of asset owners, such as pension funds. And pension funds must act for the pension beneficiary, individual Japanese person. This principle of stewardship code was established by in 2014. Then came the corporate governance code in 2015, and this corporate governance code was reflected in the listing rule of Tokyo Stock Exchange. That's why all listed companies must follow this code. Corporate governance code would ask for the company to establish good monitoring board of the companies based on the stakeholders' benefit, especially benefit including shareholders. It has been effective. Nowadays, almost all the listed Japanese companies in Tokyo Stock Exchange have the board of directors. More than 1/3 of the board members are outside directors. They are the representatives from shareholders. Some Japanese companies now even employ the directors suggested by active shareholders directly. It is not surprising. Accordingly, Japanese companies have been more likely to follow shareholders' interest, shareholders' voice, and here comes the second reform, PBR reform. In 2023, Tokyo Stock Exchange announced this plan March 31st, 2023. What is the background reason why the Tokyo Stock Exchange has announced such a plan? Japanese companies' stocks have been generally traded below the book value. The price book value is less than 1 in most of the case. And Tokyo Stock Exchange regarded this as Japan discount and asked for the listed company to do some measure to cope with it. In fact, the PBR reform is a kind of a buzzword in the market. Accurately speaking, Tokyo Stock Exchange required action to implement management that is conscious of cost of capital and a stock price. It is rather long and confusing. I repeat, action to implement management that is conscious of cost of capital and a stock price. That is what Tokyo Stock Exchange actually asked for the company to do. So first thing companies must do is the analysis of current situation. Then plan to improve the market value then the plan to improve the market value of the companies and disclose its planning. This disclosure is so much important. Next, company implemented and further analyze the situation. In other words, this is a kind of a plan, do, see cycle of companies in the market. Tokyo Stock Exchange indicates lots of indicators for analyzing the business. For example, double weighted average cost of capital, cost of equity, return on invested capital, return on equity, and of course market cap or stock price, and price earning ratio. But many of the investors and companies pay attention only on the PBR, price book value ratio. Why? I just mentioned Japan discount before, and a PBR is price book value ratio is nothing but the symbol of Japan discount. Please look at this chart graph. What do you see from this? Blue one is the Japanese company, a Tokyo Stock Exchange prime market, and orange one is S&P 500 in the US, and a gray one is a stock 600 in Europe. There are lots of message from this. But what is surprising to me most is more than half of the listed companies in US and Europe are traded by 2 times higher than the book value. On the contrary, nearly half of Japanese companies are traded less than 1 PB multiple. This is what most of the Tokyo Stock Exchange person are worried about most. Because when companies are traded subpar PB multiple, there is a growing possibility of hostile takeovers or breakup of the business by predators. That is bad for economy and a business as well. And this is the background reason why Tokyo Stock Exchange urged for the company to consider the action concerning capital cost and stock price. In short, improvement of PBR. And also, Tokyo Stock Exchange have taken additional measures. They ask for the companies to actually disclose their plan to enhance their market value, and they announce the company's list, it indicates which companies actually disclose their plan. And this list is renewed in days of 15th in each month. Status of disclosure on action to implement management that is conscious of cost of capital and stock price. This is the result. In January 15th, nearly 50%, slightly less than 50%, 49% of the prime market listed companies have announced a plan by and large. In February 15th announcement, more than 50% have announced their plan by and large. And actually the number have been steadily increasing. But as for the standard market, it is a market for listing the ordinary company. Standard markets, only 20%, slightly less than 20% have done. The reason for this difference is the prime market of Tokyo Stock Exchange is designed for a place for global trading and global companies to be traded. In a standard markets for domestic one. So the difference is rather justifiable because the companies listed on the prime market is looking for the global markets and try to enhance the shareholders' value as such in the US or Europe market. And also what is interesting to me is those companies which announced plan outperformed in stock markets than those with no disclosures, no announcement so far. So it might be too early to say, but investors welcome this kind of positive way of thinking by companies. Also, Tokyo Stock Exchange has another strategy or tactics to promote the plan. Tokyo Stock Exchange has picked up the example of good practices announced by each company. There are lots of a good example by the company. And among them, this is from Asuka Pharmaceutical Holding, a mid-cap pharma company in Japan. They said their return on equity is 8%, is more than 8%, the average of Japanese companies. But a PB multiple is less than 1, and that is far below the average of 1.2 to 1.3 in Japanese standards. So they analyzed the reason why and concluded that the poor investor relations is actively one of the causes, and therefore they would make effort to appeal their growth strategy to investors. This is quite logical and likely to be followed by other companies. I will tell you several more examples. For example, Idemitsu Kosan, mid-cap oil refinery, is now working to reduce cost of capital through transition to decarbonizing business and a change in earning structures. Also, they are trying to expand the shareholder base by improving communication. For example, creating the special website for shareholders. Mitsubishi Corporation, Mitsubishi Shoji, one of the biggest trading companies in Japan, appointed Chief Stakeholder Engagement Officer to strengthen dialogue in terms of sustainability. This might be a good strategy to reduce the long-term risk of the business and hence decrease the cost of capital. Also, in their disclosure, some investors are quoted as saying a new position of CSEO, Chief Stakeholder Engagement Officer in charge of stakeholder engagement, was created to further accelerate dialogue with the market. As you might already recognize, Tokyo Stock Exchange focus not only large cap famous companies like Mitsubishi Shoji, but also mid cap or not so well known ones, Asuka Holdings, for example. Their intention of Tokyo Stock Exchange is to promote their shareholder enhancement even in a mid and a small cap. In other words, they employed a bottom-up approach. Tokyo Stock Exchange promotion is so far so good, at least not so bad. What is the reason? What is the reason for the success of Tokyo Stock Exchange until now? The first reason is, I think, the culture of shame. In other words, a horizontal consciousness in Japanese society. It is a tendency in Japan that if one company finds that other companies in the same industry disclose their plan to enhance the shareholder value, it will be forced to make up the plan and announce. Otherwise, it will be ashamed. It may be comfortable for a Japanese company to do the same thing as others. Tokyo Stock Exchange announcement of listing or showing the example just appeal to this sentiment, a culture of shame. The second reason is that Japanese companies have the tendency to catch up. They are very fond of catching up and follow template or photo model. Japanese companies are unfortunately not good at thinking about the original way of expressing opinion. Rather, they are likely to look for the good template, good model to follow. And Tokyo Stock Exchange announcement of good examples is the showcase of a template for companies. And this kind of a good model is being piled up day by day. So many companies will be more likely to follow those templates. And third reason is most important, I think, influential power of Tokyo Stock Exchange. I don't know whether what kind of image you should have about a Tokyo Stock Exchange, but our reality is Tokyo Stock Exchange is a very much prestigious and authoritative. They are standing on the commanding heights of the Japanese stock markets. They have the rights of listing and delisting of the companies. They have the authority of rule-making in collaborating with the Japanese Financial Service Agency. They have the very big power over the market. I will show you the symbolic example, symbolic statistics. Tokyo Stock Exchange was established in 1949 after the Second World War. There have been 18 chief executives since then. And among those 18 chief executives since the foundation of 1949, 6 from brokers or investment banks, including Nomura and Daiwa, 6 from Ministry of Finance, and 5 of them were the ex-vice ministers of finance, very high-ranked officials. 1 from Bank of Japan, 1 from big business, Toshiba, and 4 were promoted from inside the Tokyo Stock Exchange. And Tokyo Stock Exchange were demutualized in 2001. And after that, 7 chief executives among 8 came from private sector. And a current chief executive of Tokyo Stock Exchange Group, JPX, are from the Nomura Securities. And a former CEO of JPX came from Daiwa Securities. And of course, the Daiwa and Nomura and Daiwa, 2 of the most prominent and a powerful investment bank in Japan. So this nomination of chief executive demonstrates the power and authority. So when Tokyo Stock Exchange announced something and recommend something to Japanese companies, it is nothing but a requirement or order from the Tokyo Stock Exchange. So that most of the companies feel they are obliged, they must follow, regardless of what they call suggestions or suggestions. But this is the order. They must oblige. They must follow. So the culture of shame, catch-up mentality, and paternalistic authority of Tokyo Stock Exchange, they are all traditional way of thinking in Japan. They are the traditional feeling of Japanese culture. I believe it is important to take advantage of this national culture, even in the equity markets reform, because otherwise, most of the people will not follow the order from the authority. I think same is true in Korea's economy, Korean market as well. Then, what could be happen in the future from now on? Japanese traditional company, JTC, JTC, have been rushing to announce their plan to enhance shareholder value. This is nothing but a manifesto or promise to investors. They firmly believe in the announced plan. That is one of the background reasons why the Nikkei average has now approaching the highest level of the history. But what if that kind of market's expectation will not be achieved, or a company fail to do so? What could happen after that? Probably a massive set-off of equities, hostile takeovers, and aggressive shareholders resolution, and etc. I cannot expect exactly, but something serious might happen if the company cannot achieve the goal they set for the investors. That could be very serious. One thing for sure is shareholder activism takes a critical role. Not only traditional activist investors such as Elliott, Third Point, and Value Act, they are all familiar in Korean market as well. They are very much active in Japanese market as well. But not only those traditional activist investors from the United States or Europe, but traditional asset management companies within Japan nowadays sometimes conduct engagement to companies and vote against the company's resolution or proposal in the AGM, and vote for the proposal by the activist in AGM. This is not surprising in Japan. And even individual investors express sympathy to activist investors and vote for the activist. That is now happening in Japanese AGM. Japanese AGM season is late in June, so towards that period, nowadays many engagement, many proposal, and many negotiation under the water, behind the door, are expected. This is the thing to watch. One of the Japanese companies I am closely watching is Keisei Railway, Keisei Dentetsu. And those companies, Keisei Dentetsu, are invested by Palliser Capital in the United Kingdom. And Keisei, Palliser Capital is asking for the Keisei Dentetsu to dispose of their significant stake of the operating company of Tokyo Disneyland. And after selling some portion of that stake of Tokyo Disneyland, Palliser would ask for the company to invest for growth strategy or payback to shareholders. Palliser was as you know, established by the ex-Elliott person. And Palliser and Elliott are two well-known activists, even in Korea. So in this sense, it is important to watch what is happening in the shareholder activism landscape in Japan from Korea, and we are closely watching the situation in Korea from Japan. In other words, we are closely watching with each other. That's a very important thing. Thank you very much.
Thank you for the presentation. For 30 years now, I have watched closely how the Korean capital market has grown, and I've written similar stories and articles, and I have a lot of ideas in my head. We don't know why we are suffering from such Korea discount issue. Well, the conclusion I arrived at was, I don't think it's the legal system. I think we're ahead of Japan in terms of the legal system, because after the financial crisis in 1997, there was the financial reform undertaken by the government. There were 4 reforms: chaebol reform and financial reform, and the governance reform was also given a strong drive, and we were ahead of Japan in that we changed the law at the time. As was mentioned by the presenter, Japan has the soft norms for listing, but we changed the commercial code, we changed the Capital Market Act, and there were a lot of strong regulations that were stipulated in law. For example, if it's a public listed company, majority of the directors have to be outside directors, and that was implemented in the beginning of 2000s. And it's not in law in Japan, it's a recommendation, and it's not even majority. So he talked about how 1/3 of the directors were outside directors, but the number is like 2 outside directors. And after Abenomics, the arrow economy was started, and compared to that, I think Korea was 15 years ahead in terms of the system and the framework. But why is Japan doing better in the stock exchange? We do have the legal system in place, but it's not being implemented. Japan takes time in building the system, but after it's set, when the manual and the template is in place, they follow that strictly to the letter. But Korea, we just write it on paper and we don't really follow it, and there's low compliance. For this system to succeed, the BOD has to play the vital role. That's what Mr. Kodaira Ryushiro said, and I couldn't agree with him more. And why isn't the BOD working? In Japan, even if the outside directors are not majority of the BOD, they are very much engaged, and even the directors nominated by the activist shareholders are appointed. But why isn't that working in Korea? I thought about that, and the answer I came up with is this: who is recommending, who is nominating the directors in our companies? We have we are at a very critical juncture. We have the election coming up in April. And what is the biggest issue? It's not a matter of who becomes the National Assemblyman, but it's a matter of who are the nominees. So there are 2 political parties, and who gets nominated to run in the elections. So in the AGM in Korea, the directors are appointed, but the step before that, as an agenda to be presented at the AGM, who is making the nominations? And if we look at the situation, it's the business owners, the majority shareholders, the CEOs. The management have the right to appoint the directors. So they manage that agenda, and the shareholders just vote yes or no. It's not like the shareholders can actually recommend the directors to be nominated and to have their rights represented. So it's like, we want to vote for the National Assemblyman that can speak up for our rights, but we are not there yet. So I think we have to have the right system of recommending who could be the potential directors. In Japan, the chaebols were all disintegrated, and there are business experts who are managing the companies. And in Korea, there are some companies that do not have owners. And so in Japan, there are companies that do not have owners. So when the shareholder activists raise their voices, then their voices are heard. But it's not the situation in Korea. The management is the largest shareholder of the companies. They have like 40 to 50% of the controlling rights. So I think that governance has to change. So we have the Value Up program coming up, and the details will be announced next week. I think the directors should consider this as a wake-up call. The shareholders should be more responsible, and I hope that each stakeholder does their job. So what is the alternative? What could be the solution to all this? We have the national pension and the large institutional investors, and we have the activist funds coming up. I think there should be an alliance, and there should be a system to actually nominate and recommend the directors. I hope that could be included in the corporate value up program. The reason it's not possible right now is because of the National Pension Service, because 5% or 10% of the that's the shares that they own, and if the NPS recommends the directors, then the company board might be swayed by their influence, so they want to hold NPS in check. So to solve that, it's not NPS having the sole right to recommend the directors, but maybe they could join hands with the foreign shareholders and other large institutional investors and recommend a lot of quality directors. We have 30 to 40% professors and ex-government officials who are sitting on boards, but we don't have business experts who are sitting on the board. Is that because we don't have such professionals? No, because the companies, there are people who used to run their companies, and the company owner is just looking for people who can act as mouthpieces, because some of these expert directors might say something that goes against the will of the business owners. Because we need a lot more of these business experts sitting on the board, and that's what we see in Japan. I think the change should start from there. And one last thing I want to mention is governance reform should not be centering too much on PBR reform, because there are many ways to raise PBR. The companies, they can accumulate asset, or even if the stock price doesn't go up, they can reduce their assets, and then that's a trick that they can play to raise the PBR. And reducing the assets could get in the way of innovation and R&D. So I think there should be a healthy way to enhance corporate value. So it should not focus too much on dividends, etc. So with that, I'd like to end. Thank you.
Good afternoon. I am an advisor to Samyang Corp, and I am also a professor and lecturer, adjunct lecturer within Dongguk University and Jeonnam University. In the interest of time, I will be brief. But I am joined by Mr. Kodaira Ryushiro, who are experts in stock price and stock market as well as corporate governance. But I'm not an expert in corporate governance, so my talk will be at a high level. So when you look at the high stock price of Japanese securities market, is it really reflecting the realities in Japan? So I'm going to talk about those fundamentals today. I mean, Nikkei 225. I thought whether or not Nikkei 225 would record its highest peak today, but then it went up and down and up and down, but then it didn't reach its highest peak. If it goes up by 400, 500 yen, then Nikkei 225 will reach its highest peak. But not just in Korea, but in Japan or in other countries. Many are now focusing on looking into the high stock price in Japan. And when you look at what they're saying about the Japanese securities market, is that they now say that the current stock market price reflects Japan's economic fundamentals. That's one view. Versus some are also saying that it's distanced from the real economy in Japan. So although it's not wanted, will it potentially end up as a second bubble? So there are some negative view on this as well. I lived in Japan about 2 times throughout my life, so I'm going to share my experience in living in Japan and also talk based on the current economic situation here in Korea. Well, when you look at the stock price here in Japan, is it really reflecting the realities of Japan? Can we say that the fundamentals of Japanese economy has improved? Going back in 2012, in December, the late Prime Minister Abe went through a structural reform, and he came up with 3 errors. So this was coined as Abenomics, and then 10 years have passed afterward. Then how are we going to view the results of Abenomics? That's linked to the current fundamentals in Japan. As our keynote speaker mentioned, the corporate governance and PBR is related to the last errors out of those 3 errors, because the first 2 focused on the fiscal and the financial strategy. So there was a lot of advancement when it comes to the first and second arrow, but when it comes to the third arrow, many pointed out that there are rooms for improvement. So the governance and PBR and reform, can it really bring a true or genuine improvement or reform? That is also the question involved here. I'm sure you're well aware of this situation. In the mid-80s, Japanese economy created a huge bubble when it comes to equity and when it comes to real estate. This is what we saw. On the right side, we have Nikkei 225. This is the equity price, which surprised everyone at the time. At the end of 80s, when you look at Japan, in the 23 province in Japan, I mean, let aside other cities in Japan, and when you look at the land price in 23 district in Tokyo, its land price was high enough to buy a city in the world. And at that time, not many thought this was a bubble. That's why bubbles are dangerous. This is an evidence of that. And I'm sure you know about this very well. In the mid to late 80s, Japan was actually the world's strongest economy. And many said that Japanese ship will never sink. But after the Plaza Accord, yen surged, the value of yen surged, and bubble was created. Many are worried about bubble today, but at the time we had strongest yen, but now it's a reverse situation. Yen is about 150 or less. So now we talk about bubble again when we have weak yen. So it's similar to the 80s, but it is also different from what happened in the 80s. What is the driver of high stock price in Japan? As Kodai-san mentioned, the governance reform and PBR reform did contribute to the increased stock price. But then on top of that, one coming from the economy, we also need to look at the system. So to my regret, I want to mention what is behind the current situation. As we're seeing the conflict between the US and Japan, we're seeing the supply chain constraint, and the economic situation around the world becomes favorable to Japan. And I think that contributed to the stock price increase as an important factor. On top of that, the key thing in Abenomics was the monetary policy. So it implemented negative interest rate or low interest rate. And there was enormous QE, quantitative easing. And because of this QE, we see weak yen or weakest yen. And of course, Japan is now building a lot of factories around the world, but Toyota and other companies still rely on export. So their export becomes huge. And also the monetary policy has shifted. So because traditional monetary policy didn't work, what they came up was in 2013, Groda Prime Minister the BOJ head started buying ETF. The governor started purchasing ETC. So they just purchase it, but they do not sell ETF. So last year, as of September, BOJ now has 37 trillion yen worth of ETF as of last year. So when the share price drops, it curbs that dropping share price. And when it goes up, it also influences stock prices going up. So ETF has that role. Unlike fixed income, ETF does not have maturity. So BOJ is a public organization, and when the stock price drops, BOJ, of course, will have a negative balance sheet. And in 2020, when Japan's stock market was volatile, many experts were concerned. So if the stock price drops, a lot of people were concerned about loss. When you look at the accounting principle in Japan, especially regarding FX and fixed income or sovereign fund, they need to have provision. So they do have a provisional clause. And ETF, they could be lost, but then the account was not created for ETF for them to count it as an accounting item. So if there is a loss, what would BOJ do? They would not just sit back. Because this is related to their performance, they have no choice but to intervene. So the monetary policy is rigid. So ironically, I think this is something that drove up the stock price in Japan. So this is one of the main factors driving up the Japanese stock price. That's my view. So fundamentals, improving fundamentals and carrying out structural reform, that is needed to sustain the current bull market. But nowadays, when you look at Japanese economy, relatively speaking, they have much room to improve when it comes to digitization and enhancing productivity, which is linked to improving fundamentals. So is digitalization of economy really advanced in Japan? And if the answer is positive, then Japan's fundamental will be increased, and then the stock price, the current stock price, will be sustainable. I'm not a fortune teller, but if I may predict the future, going forward, the stock price in Japan, I believe, will be distanced away from the real economy. And the stock price will remain high for some time because there's quantitative easing, weak yen, and inflow of overseas capital will continue. So, of course, the Nikkei 225 will go over 40,000 yen soon. Here, of course, corporate governance and PBR reform will contribute to the momentum to an extent. But in a long term, the stock price cannot but reflect the fundamentals of the economy. So there will be an adjustment. So I will conclude. Conclusion. This is just for your reference. Banks in Japan, unlike other banks in advanced market, it's very difficult for them to do quantitative tightening because of their structure. And this can drive up the stock price in Japan, but this could also hold Japan back because of this. Thank you for listening.
KB증권에서 ESG 리서치 운영하고 김우성입니다.
Hello, everyone. I am Jun-seop Kim, and I don't know if I belong here because I'm surrounded by such experts, but I'd like to talk about, my experience. There's ESG research team within KB Securities, and we are looking into Japan a lot because, like other investment destinations, if it's considered promising, then investment comes in. If you look at this chart, this is the Japanese equity and bond market, the inflow of cash, and we see that 2014 is a inflection point, and we see a lot of funds coming in. So if we look at the inflow, we see that there's a drastic increase since 2014. So what happened back then? There's Abenomics, and there's three arrows, and we believe that it's the impact of that. And of that, we believe that a stewardship code played a role. In Korea, there's talk about stewardship code. Institutional investors as stewards have to play their due role. And so institutional investors begin to talk about their responsibility. And this chart shows the professor Ito Gumio, professor who was behind the Abenomics policy. He did a joint project together with the Japanese government, and it's quite interesting in that in the capital market, he broke down all the market players, and to each one, in order for the right valuation of Japan stocks, what should be done. So he did a survey, and what was interesting was the time horizon of the companies was different from the time horizon of the institutional investors, and that was different from the retail investors. And that was what was discovered through his survey. And so time horizons, how to align them for the different stakeholders. And the solution was they have to speak the same language, they have to use the same expression, and they have to use the same yardstick. And they should engage in a dialogue that meets eye to eye. And I have the most fights with my wife. Why do I argue with my wife the most? I thought about it. That's because I spend the most of my time at work. There are many fund managers here. I spend a lot of time with the fund managers. I speak less with my wife, thus I argue with her more. So I don't see why you think that's important. How could you do this to me? So that's the type of conversation that I have with my wife. And that's the situation of the current corporate governance structure because there's not enough dialogue. Professor Ito Gumiro had taken this approach, and I think this was quite meaningful in that he was able to discover that insight. And so we call these Ito reports from 2014, 2017, and then another year. There were 3 reports issued, and after the reports were out, it created a trend, and the institutional investors began to communicate more actively with the corporations, and I think that was the highlight of the reports. GPIF, that's the Japanese pension service. So in order for, in order to have your investment in, then, you have to have a dialogue with the companies. And, that was a prerequisite. And we see an increase in the number of dialogues in companies. And what do the shareholders want? They want higher ROE. And we see that the ROE was moving to upward direction. TSE, Tokyo Stock Exchange average was 1% ROE. That was quite shocking, but we see the pace of improvement is even more shocking. Since 2014, it was 10%, and now it's up to 10%, 12%. So what we're thinking is the corporate governance reform that was mentioned by Mr. Kodaira Ryushiro and the PBR reform. Well, I think PBR reform was like a catalyst. But what we believe at KB Securities is even before that catalyst kicked in, the temperature of the water had risen, and that's why it had come to a boiling point and it was able to increase. And what if we fail to meet the market expectations? But I think Japan has nothing to worry about because for dozens of years they have created these channels for active dialogue, and they're talking institutional investors and the corporations, and the dialogue has been fixed in templates and principles, so I think it's going to do well. Thank you. Thank you very much. Yes, corporate governance is key, even within your family. I got a call from my boss, but I didn't get that boss, meaning my wife. And in order to have a successful forum, there needs to be 4 principles. That was the comment that I had sent out. And the third point was the FSC and the government officials are creating the templates as we speak. The companies are lobbying and toward the government. But I did meet with the asset managers, but I heard that nobody got a phone call. And it doesn't make sense. It's such an important issue. The government shouldn't be working at it alone. They should be talking with the ecosystem, the stakeholders. What they did in Japan was the TSC action, before it was announced, it had interviewed about 90 plus institutional investors, and there were there was a good mixture of foreign and domestic investors, and they got the feedback from the companies and institutional investors, including foreign investors, also had some say in it. So they got the feedback, and then there was this continuous reiteration of the final template. So there should be a creation of joint partnership to create value. I think the companies feel that they have to do something. And now, Mr. Hyo-sub, please go ahead.
Thank you. I would like to briefly go over my panel discussion. In summary, Nikkei 225 has outperformed other major stock index by huge difference. And there's 2 reasons for that. One is governance reform, and another is PBR reform. That's the summary of the talk. And PBR reform does seem like a success. What was interesting from his talk was that TSC's own governance was key contributing factor to the success. In my view, in addition to the keynote presentation, I also picked governance reform as a main factor. So we have a stewardship code on the left side and also the government governance code on the right side, which took place in 2015. The difference with Korea is that in Korea it was more voluntary, but in Japan there was some mandate, and ESG and sustainability is highlighted, and also there's a lot of advisory going on. That's the strength of the stewardship code. When it comes to corporate governance, we have done it before, but in Japan we're seeing enhanced authority or empowerment of board of directors, and also there was strong communication, and that also played a important role. Another thing is the institutional investors' demand. And Japan has the highest number of activist fund. The number does vary, but sometimes U.S. is number one, or sometimes Japan is number one. But they're fighting for number one position. After Abenomics, the activist fund in Japan has increased significantly in Japan, and the background or this basis has played an important role in Japan's success. What is also important but not discussed today is that JPX Prime 150 Index was created. MPIF, the pension fund, or this BOJ, has announced to review a new benchmark. In Korea, many are saying that they're creating index out of low PBR, but it's not the case in Japan. 75 is coming from high ROE, and the other half is coming from the PBR side of it. So that's the difference. And Professor Kwang-ki Kim mentioned this, but I myself, when you look at the global trend, yen has depreciated because of the BOJ policy, which has contributed to the high stock price in Japan. And this is also a very interesting chart. So when you look at FDI from China, it's going to Japan. When you look at the sheer size of it, the FDI in Japan is going to Japan. FDI from China is going to Japan fast, and that's another factor driving the success of Japanese stock market. So next is the implication for Korea. It's not going to happen overnight. An important thing is the governance reform, and we need to create institutional investors' demand. And I am participating in the corporate value up program with the government. So I do have some questions for Kodaira-san. Japan has successfully carried out PBR reform. So how can Korea also follow your route? And second, Korea's governance score is very low. We have low dividend, we have low shareholder return. And outside independent directors are just big shareholders, speakers. They act on behalf of the large shareholders. So how can we overcome that? That's another question I have for you. Thank you, Dr. Lee. We have about 10 to 15 minutes, so we can accommodate some questions from the floor.
Thank you very much. Yeah, as I said in my presentation, cultural difference is very much important. And as Professor Yang said, that kind of stream of culture and authority of the stock exchange are rather irrelevant to the situation in Korea. But a kind of a template or a model setting seek to fit to their culture or business culture of Korea. I think this kind of a strategy or tactics based on their business culture is very much important. So if you think that in Korea, more stricter rule or regulation is effective, then their stock exchange might have some more rigid and clear-cutting listing rules to impose them on the listed company. Otherwise, stock exchange have the authority to delist companies from main markets. That kind of a severe approach might be or may be effective when I imagine the business culture in Korea. So I think that's my conclusion. Just follow Japan's example is not enough. You can pick up the proper one among them and modify or repair the structures to fit for the Korean way of business cultures. That's my conclusion.
We have a few foreign investors and research people. You are very welcome to ask questions.
Please raise your hand if you have a question.
I have two questions for Kodaira-san. Under the commercial code in the Article 282, there is the fiduciary role of board of directors. They have to serve the company. That's the important message from the code. So in Japan, what is the fiduciary role in Japan for board of directors, outside board of directors? So in Japan, the reform has been successful because there was no owner of the company. That was one of the reasons behind it. Do you agree with that comment? That's my question. How is the Japanese corporate governance structured in that case?
So you were asking about ownership, difference of ownership structure between Korea and Japan. Yeah. The second question. Oh, what is the first one?
One is the definition of
Role of directors in general. Responsibility of directors in general in Japan have the responsibility of monitoring the right things to be done in the corporate actions. And they are rather focused on the monitoring role rather than the execution. So in Japan, board of directors just function as the monitoring board. Monitoring is a basic function of directors. And as for the second questions, the difference of the ownership structure in Japan. Yes, there is no Korean-style family control structures in Japan, but there might be some ownership or family control in Japanese companies as well. For example, imagine this case in Toyota Motor, one of the biggest automotive companies in the world. And actually, Toyota family has the influential, is very much influential. But Toyota family in total has a very small stake of the Toyota Motors. But still, they have the influential power, and they could nominate the successor of CEO. So this is rather kind of a puzzle, a miracle for Japanese corporate governance. It is not, there is no logical answer on how the Toyota's corporate governance is actually working. But in general, yes, there is no strong family control ownership. And after knowing the situation in Korea, it will be more difficult for Korean investors to overcome the ownership, family control ownership. That's my conclusion. That's my observations.
Thanks for the lecture, sir. You mentioned one of the Tokyo Stock Exchange authority and power. One of the examples is that they have the power to delist the companies. And I wonder, is it really achievable? I mean, what if the corporate doesn't have enough capital to buy the shares? What if shareholders doesn't want the company to delist in the stock market? How can we actually approach it?
Yeah, in fact, there is not so many cases of delisting. There is very few examples of delisting in the companies, especially in these 5 to 10 years. But actually, Tokyo Stock Exchange have the power and authority to make the company to be delisted. That is a kind of source of influence by the Tokyo Stock Exchange. That's the point, even if it is not so exercised. So they have the power, but they don't exercise the power actually. That is a kind of way of exercising influential power to listed companies from Tokyo Stock Exchange.
On a side note, a journalist talked about, what will happen to delisting, and it could be a good news because problematic companies should be delisted. Yes, next question, please.
In all policies, there is pros and cons and strength and weakness. Before we implement this policy, within Japan, I'm sure there has been a lot of debate. What was the response from the Japanese companies? And after the implementation, how does Japanese corporate feel about these policies? what are they saying about this?
That is a good question. So actually nowadays there is a strong voice from the industries about the contents of the corporate governance code. Actually, they are saying that the current corporate governance code is too rigid and very restrictive. That's why they are asking for the Tokyo Stock Exchange or Financial Service Agency to relax some of the corporate governance code. Actually, those kind of voices are reflected in a dialogue between business and authority, or a kind of a conference or council members, and etc. There's a lot of there's some opportunity for business leaders to express their own view about the corporate governance reform, and actually some of them are reflected. That's a reality in Japanese decision making.
Yes, in the middle, please. Thank you for the presentation and all the comments. I have a question for Mr. Kodaira Ryushiro. Looking at the major Korean companies, whether they're, the second generation or third generation, they have inherited the company. But for old Japanese companies, I think the ownership is scattered, but Uniqlo or Rakuten, the not so old companies in Japan, maybe the owner could, the children of the owner could inherit the companies. Or so, is there any case in Japan where the companies are, handed down to their children?
Yes, there is some cases, and what I observe is that kind of generation change is now happening because there are many successful ownership business in Japan. They were established after the World War II, and those founders are now getting older and now retiring nowadays. So those owners are now looking for the successor, and their daughter and sons could be the possible candidate, but other people might be appointed. I don't know, but actually, those founding members to establish a business after the World War II are now actually seriously looking for the candidate. That's the reality of Japanese business.
Thank you. 마지막 질문.
Thank you very much. One last question.
I have a question to Dr. Lee Hyo-sub. You asked Kodaisa-san about how Korea can be successful. And you also talked about institutional investors' demand and boosting that demand. So in your view, how can we be successful? We would like to hear your perspective. But as I have said, corporate governance and stewardship code is important. And as Dr. Jun-seop Kim mentioned from KB Securities, a lot of dialogue, communication is important. GPIF carried out a lot of activities to enhance stewardship code, and that's where we can learn. That's something I would look into.